What's up, everybody? Welcome back to my channel.
Earn it, save it, invest it.
In this video, I'm going to quickly go over why this month and this specific time right now is a great time to buy. The stock market has been taking a hit. Everyone's kind of freaking out about the tariffs. We got this new administration coming in, but I'm going to go over exactly why you should actually be buying instead of selling. Let's go over it really quick. If you do like this stuff, the video I go over, all the information that I go over with you, please give it a like and subscribe. It helps with the algorithm a lot. I'm trying to grow my channel a little bit. And if there's anything that you guys think I should be doing better or any suggestions you have or any comments, please leave it in the comment section. And I'd love to talk to you guys about it. So for the S&P 500, you can see over here, over the 12 months, right? February and September are the worst months. Right? We just came out of February. April is the best month along with December at 1.6. March is just over 1%. This is on the average performance by the S&P by the month, right? So on average over all these years that the S&P 500 has been going up or down, whatever, right? The S&P 500 has been in existence. On average in March, it gains 1%. Doesn't mean that it's going to gain 1% this month. It doesn't mean it's going to gain anything. It could go down, whatever. But the odds are in your favor. History is on your side. So March is a little bit over 1%. April is 1.6%. So it's kind of looking like the next 2 months on average should be going up. Now, if you look at the AAII sentiment, right? This is the American Association of Individual Investors. Just a week ago, we hit the biggest point. We hit 60.6 right here, right? 60% of the investors were feeling bearish. They actually thought the market was going down. They felt like the market was going down, and it has continued to go down. And as you can see, this week it's improved. It went to 57, right? So you're thinking, okay, the bulls, it must have gone up. It didn't. The bulls stayed at 19% and 19%. It actually went down by 0.1%. So even though less people are feeling bearish about the market, no one is feeling any more positive about the market, right? So a lot of people are just not feeling good about the market. That's usually a sign to buy, actually. Right now, we're in the extreme fear, right? If you've ever heard the fear and greed index, right? If we're in extreme fear, then you can see how it's kind of pointing to the left. It's a 0 to 100. We're at a 20 right now. Everyone's fearful. The market's going down. People are talking. There's a lot of chatter. It's fearful. People are scared what might happen. Extreme greed is when everyone is just buying. It doesn't matter what the valuation of a company. It doesn't matter. Everyone's just buying, right? You can talk 2020, 2021 was really about extreme greed. Again, extreme fear is usually a signal to buy. It usually is. And I know it's one of those mindsets you gotta change, but you gotta act greedy when people are fearful and act fearful when others are greedy. Because when everyone's getting really super greedy, you gotta be like, okay, something's going to happen, right? But when everyone's being fearful, everyone's just selling off, the world is just not going to end right now. The country is not going to end. We're not going to fall apart. We are a top producing, a huge country. Like we're not going, the stock market's not going anywhere. Now, depending on what you have your money in, of course you could be a little bit more fearful than others, but in reality there's no real reason. I don't think there's any recession fears. There shouldn't be. We have a little bit of hints of inflation with the tariffs, and we have this and that, but we have the Fed's going to lower the rates, right? They can lower the rates if we have any inclination that inflation can increase. So again, when the market is fearful, it's actually time for you to get greedy. And right now we are in extreme fear. Now I'm going to go back to this list, right? The sentiment list. And you can see 60%, right? Last week was bearish. Now what I want to do is check this out. We're going to go over this. You can go over it with me. Check this out. Right now, right here, this is what we have, right? We're at 60%. Oh, it's 1 p.m. Market closed. All right. 60% feeling bearish, right? We got the bearish, right? This is the bears, right? We have 60%. Now I want you to see where these numbers go, right? We're in the 20s, we're in the 30s, in the 20s, in the 20s, right? We even hit the teens right here. Then we kind of hit the 30s, and the 30s, okay, the 40s, okay, 40s a little bit, 30s, 40s. Then we got 52 right here, right? We have 52, 55, 56, 60. September of 2022 is when the last time we've hit the 60% mark in the bearish, right? For the sentiment. And if you go back, the largest one, the last time we even were in the 50s was in December of 2022. And what happened? We bounced. We bounced now. Obviously, you're going to go, if we were to go through 2022 from here all the way down, basically all this, it's going to keep increasing. Inflation was going up, right? We had increase in the Fed rate. So really, it was justified. It was a lot more justified, right? And you can see how it was continually going up slowly. It went from the 30s to the 40s, and then it kind of jumped in the 50s, 40s, kind of settling in the 40s, 30s, 40s, 50s, right? 40s, like it was just staying up there. But if we go back to today, I mean, I guess we're in the 30s and 40s, feeling a little unsettling from the December. But I mean, we quickly went from 20 to 60. I mean, that fast. So again, if you want to go back to December of 2022, let's go to the S&P 500 and let's go to December of 2022, which is right here, right? This is when sorry, no, that was December 2021. December of 2022 is right here. This is where we had some of our lowest feeling of the market was all around here. It's actually a September, right? We said in the 60s was September, all around here. What happened? It went up. Now, that's not to say that the market's going to continue to go up and up and up, but it is to say, hey, when the market and the sentiment, people are getting fearful and people are not feeling bullish, feeling super bearish, but there's nothing really behind it. There's nothing behind it. Like we have the Trump administration pushing the tariffs, but that's not going to cause a huge effect now. And if you guys don't remember, he's going to be able to make a deal. He did it last time. We had this tariff fear and everything, right? Let's go to 2018. 2018. We dropped. Now this one at the end of 2018 was an intense drop, right? We had a huge correction and that took us down about 20%, right? We had a 10% drop starting in January that lasted 67 days, and then we had an 82-day drop that went 20%, right? And from we're talking 207 days total, 300. So we're talking from 2018, January 2018, all the way to October 2019. So almost 2 years, a year and 9 months or so, right? No gains. No gains. So it's possible. It is possible that we just have that same thing, right? No gains. Just nothing. I don't think it's going to go that way. I don't think it's going to go that way this time around, but you just never know. You never know. So just keep looking at the stock market, looking at the charts, looking at the numbers. You do what you think is right. There's no way I can tell you what to do with your money, what to invest in, but I am starting to buy. I bought a little bit of Hims. I bought a little bit of Meta. I've bought some stuff, bought some Amazon, bought some Fubo, bought some Celsius. I'm buying this dip. Now, some of those are a little bit different, right? Something like a Hims, that's nothing like the actual stock market, right? In the sense of this is nothing like the S&P 500. That doesn't look anything like the S&P 500. Neither does Celsius, right? Neither does Fubo. These ones that I'm buying based on their numbers, based on their valuation, based on their future. But I'm also buying stuff like an Amazon and a Meta, right? When you see, Meta going down this far, Meta's gone down now 15%. I mean, look at here. We have a fit 16%, 20%, and it went back up. It went back up. I mean, look at all these drops. I have them all labeled that were 10% or more. Here's 13, 12. It went back up. If the company is good and there's nothing really viable for like the actual foundation of our financials, our country, or our direction, it's the and yes, we have this new administration that's kind of changing things up a little bit, but at the same time, it's not really, because if you go through, you know, if we go through S&P 500 through his first term, right, 2017 to 2021, then that's where it was. I mean, yeah, we had these bumps in the road, and we had COVID, the COVID drop. But I mean, like it went up significantly. So we're gonna have some bumps. This is a bump, and if you can't handle speed bumps, then get off the road. So, again, I say now is the time to buy. People are fearful. That's when you should be greedy. But again, this is not financial advice. Do with it what you want. It's your money. I'm explaining to you what I'm doing with my money and what I think my money is going to return. And I believe I'm going to have some pretty nice returns here. I'm also not going all in, right? There's no point in just going, oh, I'm throwing all my cash in. And we are not even close to a 20% drop or anything like that. So I'm not deploying all my cash yet, but I'm now putting a little bit more in. So that's just my strategy right now. Hope you guys enjoyed this video. Hope you got a little bit something out of it. Again, this channel is really to try to help just create some opportunities for us in the stock market. I guess, a young investor. I'm in my 30s. I have 2 kids that I'm looking after, right? So I got their portfolios already kind of getting built a little bit, and I just want to encourage others, especially parents. I want to get parents to start investing in their kids like that. Start building a portfolio, starting early, using the power of compounding interest. It will work. I know it takes 30 to 50 years to really feel the heavy power of the compounding interest, but that's how you create generational wealth. A lot of these billionaires aren't just going to pass on the billions of dollars. They want to pass on the knowledge. They want to pass down a business. They want to pass down something, but not just money. So I want to be able to okay, here, I'm going to pass down something to help take care of you a little bit, but you still need to do your life and do other things, right? But that helps them when they're older feel a little bit more relieved. Hey, I don't have to take care of all those medical bills. Oh, hey, when I'm starting to retire, I have this little nest egg. That I think is huge for us regulars, right? I'm a regular guy. I'm not a millionaire. So for us people who are just regular people, I think that's huge to start early, start our kids early. So that's what I'm trying to do. And I'm trying to encourage other people to do that. And I know my dividends are not going to even be seen for years to come. And I'm okay with that. I'm okay. I just want people to try to do it too. So again, hope you like this video. Give it a like and subscribe. And don't forget to
Earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.